first thing we'll be looking at is equity to be raised. Competitors, Electronic Arts and Take-Two Interactive Software have been publicly listed in 1900s, and the information on capital structure is not fully available. Zoom, who has completed its IPO in 2019, is used to estimate capital structure for Discord. Debt figures in 2019 for Zoom is not provided, hence liabilities over assets is used to measure the capital structure. For Discord, pre-IPO capital structure is 65%, and post-IPO capital structure is 40%. So the capital to be raised is expected to be $556 million. It is worth noting that the trade-off theories is considered while determining the amount of equity to be raised. Pre-IPO liabilities over assets ratio is higher, which indicates the debt ratio is relatively high, and the cost of financial distress is high, but we cannot raise too much equity since there are benefits of tax shields from debt. Moving on, we'll be looking at expected return. First off, we have CAPM model. Market risk premium of 5.5% is taken for US. Beta is expected to be lower than 1 because the electronic gaming and multimedia industry has thrived during the pandemic and has relatively smaller fluctuations. We use the intermediate value of the competitor's beta as the expected beta for Discord. This implies we expect Discord to have lower sensitivity to market fluctuations that gives lower risks and volatility relative to the stock market as a whole. This also indicates a reasonably low required expected returns of around 5.6% for justifying the underpricing of Discord's IPO stock. Second, we look at APT model. APT considers several macroeconomic factors such as exchange rate, inflation rate, GDP growth, and interest rate that determines the risk and return of the stock. Beta is determined by Discord's sensitivity to these macroeconomic factors. APT would be more precise to assess the expected return on our IPO as Discord is sensitive to several systematic risk factors. However, given that the data available is limited, CAPM would be more appropriate to determine the expected return, which is also the cost of equity for Discord. Next, we'll look at valuation. First, we have enterprise value estimation with DCF model, absolute method. Free cash flow volumes in 2020 and 2021 are based on the information of competitors. Free cash flow growth rate for years 2022 to 2025 is forecasted to be 45% due to Discord's rapid growth during COVID-19 pandemic. The terminal value is calculated based on perpetuity growth rate 2%, which is the projected inflation level. Equity value is calculated with the figures from Discord's funding report. The discount rate, which is weighted average cost of capital, is 3.76%. Corporate tax rate is 21% in US. Cost of debt is estimated based on the figures of competitors. Average pre-tax cost of debt for EA is 2.8% and for T2 is 3.6%. With this method, enterprise value is expected to be 17 billion. Next, we have enterprise value estimation with PE multiples, relative method. Given the results from both methods, EV is expected to be $16.25 billion, which is also consistent with the estimated valuation after Discord's new Series H funding in September 2021. Now let's look at the pricing range. Given the EV and equity amount to be raised, we can calculate that high-end price per share is set at $36, and we use the price discount range, which is consistent with the overall US market from 2% to 5% discount, concluding our pricing range between $34.20 to $35.28 per share. IPO fee is calculated based on the amount of equity to be raised. The range of fee rates is based on our historical level. IPO fee is expected to be between $38.9 million and $61.2 million. We are obliged to purchase the unsold shares. In summary, this is the IPO process, consisting of proposals, team, documentation, marketing, board and processes, shares issued, and post-IPO. In conclusion, we suggest you to raise $556 million of equity, a price range between $34.2 to $35.28 per share, and an expected return with CAPM model of 5.61%.